Welcome to Finance News UK, all your finance and investing news that you might care about and everything you didn't ask for, all in one place. Let's get straight into this week's headlines because we've got some great stories as usual. Firstly, in the Elon Musk show, the SpaceX CEO took to Twitter this week, as he does every week, and had a go at Bernie Sanders, the lovable Vermont senator that everyone wishes was their granddad. In response to Sanders' tweet about billionaires paying their fair share of taxes, Musk responded by saying, "I keep forgetting that you're still alive," and then further taunted the senator by saying that he will go ahead and sell more stock. In more Elon news, don't worry, there's always more. JP Chase is suing the Tesla founder for $162 million for his tweets about taking the company private back in 2018. Apparently, Tesla sold stock warrants to JP Morgan back in 2014, which meant that they would be due shares of cash if stock price hit certain levels. Those warrants expired this year and JP Morgan are now looking to get some of their dough. All too complicated to really understand what's going on. Either way, don't worry, the Tesla stock price still went back up again this week, gaining 10% from its lows last week and now back over the $1,000 mark. Here in the UK, not to be outdone by the US, inflation has now risen to a record 4.2%, the highest level in 10 years. Data from the Office for National Statistics and the Consumer Price Index confirm that the price rises have been mainly driven from the excess costs in energy prices, fuel at the petrol pumps, second-hand cars, and every other industry who relies on energy to get things moving, which is everyone. Samuel Toombs, the chief UK economist at Pantheon Macroeconomics, was quoted as saying on CNBC that a 5% peak is a strong possibility since the jump in the headline rate in October to its highest rate since December 2011 was driven primarily by the 12.2% increase in Ofgem's default tariff price cap. Or you should say tariff price cap, really, shouldn't you? Not crap. Better get investing, guys. Don't be leaving that money in a post office savings account. Ugh. Mr. Kipling is heading to the US to satisfy the taste buds of the world's largest consumer of sweets and confectionery. Move aside, Twinkies, the British are here. Alex Whitehouse, the chief executive, said that Premier Foods would focus on its cake snap pack slices before considering adding the rest of Mr. Kipling's range, which includes jam tarts and apple pies. Premier Foods already sells cakes in 1,000 Australian shops and its Sharwood sauce range in European supermarkets. After trialling out more of their products in Canada, the struggling food producer hopes to expand into the US in Q4 this year to improve their hopes at turning over a profit, getting over the challenging commercial environment with higher wage prices, increases in raw ingredients, and just general price inflation. They will need to do exceedingly good to make a difference. In the digital world, Morgan Stanley predicts that the opportunities from the metaverse could top $50 billion by 2030 as luxury good retailers seek to recreate their physical products in the digital world. Revenue streams from digital mediums for luxury brands are negligible. We think this is about to change, strategists at the US investment bank wrote in a note on Tuesday. The investment bank noted that Roblox gamers change their avatars daily and dress them up in different ways, creating a huge opportunity in the future for digital clothing designers. This makes total sense as digital clothes need to be changed and washed just the same as physical ones. Like I said in another video, one day it will be buy a physical t-shirt and get the digital one absolutely free. Watch this space. Up in the skies, aeroplane manufacturer Airbus received an order for over 250 new planes, which is its largest new order since the pandemic of last year. The new order has come from a private equity firm called Indigo, which has stakes in multiple carriers across the world, including Wizz Air, JetSmart, and Frontier in the US. The final amount of the order was not disclosed, but it's likely to be quite handsome, although I reckon they would have got themselves a pretty good discount. And finally for your headlines, the famous LA Lakers Staples Center will now be renamed the Crypto.com Arena from Christmas Day. The home of the LA Lakers will be part of the crypto world in the most lucrative deal ever known. One insider said that the deal was for $700 million over 20 years for the rights to change the name of the stadium. Crypto.com is a cryptocurrency exchange that allows people to purchase crypto, earn money on their assets, and also offers a Visa payment card to spend money using your crypto assets. The exchange also has their own CRO coin, which has exploded in value over the past few months, making hodlers very wealthy indeed who stake their coins to get hold of their payment cards. Watch this space. I don't think it'll be very long before we see some more big-time name stadiums around the world taken over by crypto exchanges. What's next? The Binance Megadrome? Next up, let's talk about IPOs of the week. Ooh, IPOs of the week. I wouldn't be doing that in public. Sweetgreen in the US is looking to go public this week. Today, as we film this, in fact, the company who runs restaurants with a healthier edge to them sells visitors lots of high-protein, low-fat meals. The company raised $364 million as it sold 13 million Class A shares in the IPO, up from an expected 12.5 million share offerings. With a total of 106 million Class A and Class B shares outstanding after the IPO, the pricing valued that company at $2.98 billion. The stock is expected to start trading on the New York Stock Exchange sometime after open under the ticker symbol SG, all according to MarketWatch. In true IPO fashion, don't worry guys, this company is also making a loss, which should mean that we should see a huge bump once this company goes public. Companies making profit is bad, remember. We always want the ones that make a loss because they have to go to the moon. The company lost $30 million on $94 million revenue last quarter. Make sure you do all of your own research on Wallstreetbets on this one before YOLOing all of your life savings. Next up, let's go to our new section that looks at all the stupid things that have happened in the stock market this week. Just when you think it couldn't get any worse, fails of the week. Everyone's favourite social media pump and hype stock, Tattooed Chef, the plant-based food manufacturer who sells its wares to supermarkets in the US, had its earnings leaked before they were officially announced. Ooh, awkward. In true stock market fashion, the shares initially began a sell-off as it was presumed the results were going to be horrible before the market pulled back in a slight recovery for the stock. It currently trades at just over $18 per share, down from its heady highs of $28. Again, in true stock market fashion, even though the company did show some increase in earnings, for a fast-growing company, this is really not delivering anything special. Gross margins are low, as you would expect in this industry, and they're losing more money than they were last year. Not a good sign. $8 million loss compared to $3 million loss last year looks like a great growth story to me. Well done. Anyone investing in this company needs to have their head examined. Buying the S&P 500 would have provided you more gains than this stock has done over the last 5 years and even the last year by a mile. Index funds for the win, long live the index. And now let's jump into our browsers and see what's happened over the past week on our favourite Reddit thread on Wallstreetbets. Welcome to the best of the bets. Here is my favourite pick of the week so far. Deep inside of us all, we are this cat. Where are my gains and the Lambo that you promised to me by investing, damn you? I thought this was a get-rich-quick scheme. And for my pick of the week for losses and gains, here is an ape who bought the dip on Tesla at $990, clearly because it was very cheap. Just a slight $194,000 win for this trader. Wouldn't you just love to see what else they invest in and have to pay short-term capital gains tax on? They always forget to mention that, don't they? Good old stonk investing. Anyway, that's everything we have time for this week. I hope you've enjoyed the video. Please drop me a big fat like if you have, subscribe if you aren't already, and we will see you in the next video. And as always, happy investing everyone. To the moon?